3 days from now, on March 18th, 2026, the most powerful financial institution on the planet will make a single decision. And that decision will either launch silver toward $100 or crash it toward $70. There is no middle ground this time. And tonight, while most investors are completely unaware of what is coming, I'm going to tell you exactly what to expect, exactly what the Fed will say, and exactly how to position yourself before Monday morning changes everything. Let us start with the facts. The Federal Open Market Committee, the FOMC, is scheduled to convene on March 17th and 18th. The rate decision will be announced on March 18th at 2 p.m. Eastern Time. Alongside the rate decision, the Fed will release its summary of economic projections, the famous dot plot that shows where policymakers expect rates to go for the rest of 2026. And then Fed Chair Kevin Warsh will hold a press conference that could move silver by 10, 15, even 20% in a single session. Right now, markets are pricing in a 95% probability that the Fed holds rates steady at 3.5 to 3.75%. Nobody expects a cut on Wednesday. That part is not the story. The story is what Warsh says at that press conference, because every word he chooses will either open the door to future cuts or slam it shut. And that distinction means everything for silver. Here is why this meeting is different from every other Fed meeting this year. When the Federal Reserve cut rates 3 times in late 2025, silver exploded from $30 to over $121. Rate cuts weaken the dollar. A weaker dollar makes silver more expensive in dollar terms. Rate cuts lower Treasury yields. Lower yields make silver more attractive because the opportunity cost of holding a non-yielding metal decreases. Rate cuts signal that the Fed believes the economy needs support. That fear drives investors into safe haven assets, including silver. All of that ran in reverse when the Fed signaled a pause. And right now, silver sits at $81, reflecting that higher for longer reality. But here is what the market is not fully pricing in yet. According to analysis published just 2 days ago by IUX on March 13th, the Fed faces a genuine dilemma at this meeting. On one side, energy-driven inflation from the Iran war and the Strait of Hormuz closure is pushing prices higher. That argues for keeping rates high or even raising them. On the other side, economic growth is showing signs of fatigue. Consumer spending is cooling. The housing market is stalling. Corporate earnings forecasts are being revised lower. That argues for cutting rates sooner rather than later. Warsh will try to thread the needle. He will try to sound hawkish enough to maintain credibility on inflation while leaving enough dovish signals to avoid crashing markets. But threading that needle is nearly impossible. And silver will react violently to whichever side he tilts toward. The bull scenario for silver looks like this. Warsh acknowledges in his press conference that inflation, while still above target, is trending in the right direction. He hints that the June meeting is live for a potential cut. He expresses concern about slowing growth. The dollar weakens. Treasury yields fall. Silver, which has been sitting on the $80 to $82 support level for 2 weeks, finally gets the fuel it needs to break above the $91 to $94 resistance zone. Citigroup has already said that a dovish signal from the Fed is the single most important near-term catalyst for their $100 target. A clean break above $94 on Fed Day would be one of the most powerful technical signals in the silver market this year. The bear scenario looks like this. Warsh is more hawkish than expected. He emphasizes that inflation remains too high. He says the committee sees no cuts in 2026. He warns that tariff-driven inflation could actually force rate hikes if conditions worsen. The dollar surges to new highs. The dollar index, which already hit a 3-month high of 99.69 on March 9th, breaks above 100 for the first time since 2022. Silver breaks below $80 support. The next level down is $74, and if $74 breaks, Marko Kolanovich's bear case of $50 silver starts getting taken seriously. There's a third scenario that nobody is talking about, but that may actually be the most likely. Warsh delivers a deliberately ambiguous statement. Not clearly dovish, not clearly hawkish, just uncertain. This is what the Fed did at its last meeting, and it is what a central banker does when the data is genuinely mixed. In that scenario, silver gets a burst of volatility in both directions. An initial spike on any hint of dovishness, followed by a pullback when the hawkish elements are processed. Then, a slow grind back toward the key levels as the market tries to figure out what the statement actually means. Here is what you need to watch on Wednesday. First, the dot plot. Count how many FOMC members are projecting 0 cuts in 2026 versus 1 cut versus 2 cuts. If more than 7 members project 0 cuts, that is hawkish. If more than 7 project 1 or more cuts, that is dovish. This is the single most important number that will come out of Wednesday's meeting. If he leads with inflation concerns, the market will interpret that as hawkish. If he leads with growth concerns or labor market softening, the market will interpret that as dovish. Third, watch silver's reaction. In the first 30 minutes after the 2 p.m. announcement, the initial move is almost always the right move. If silver spikes higher on the announcement, the market has decided the statement is net dovish. If silver drops hard, the statement is net hawkish. Fourth, and this is critical, watch what happens in the Shanghai overnight session after the press conference ends. Shanghai has been trading physical silver at massive premiums above COMEX. If the Fed delivers a dovish surprise and the dollar weakens, Shanghai buyers will accelerate their already aggressive accumulation. That would add fuel to any rally. Here's the bottom line for tonight. Silver at $81 is sitting at a crossroads that only gets resolved on Wednesday, March 18th. The fundamental case for silver has not changed. The structural supply deficit is real. Industrial demand is growing. The gold to silver ratio at 61-1 remains historically elevated. The math to $100 and beyond requires nothing dramatic. Just a Fed that acknowledges the economy is not strong enough to justify perpetually high rates. But if worse surprises to the hawkish side, silver will test $74 before it tests $94 per dollar. And every investor holding silver right now needs to be mentally prepared for that possibility. 3 days, one decision. Either $100 is back in play or $70 becomes the conversation. Watch March 18th at 2 p.m. Eastern, and subscribe right now so you get the live breakdown the moment that decision drops. Because in this market, 3 hours of delay means missing the entire move. Drop your prediction in the comments. Dovish Fed and $100 silver by April, or hawkish Fed and $70 by end of March. I read every single one.